Good evening. It's about 3 a.m. I've been up staring at these Doge numbers go from 32 to 20 to 28 back to 25. I'm just watching it. I'm not selling it or moving around, but as curiosity is tapping me on the shoulder, a question pops into my head. How did Nas actually make that 100 million on the Coinbase IPO on Wednesday? So I did some research, and I know you guys are going to find it interesting when I share it with you, so let's get started. If you don't know who Nas is, I'm going to assume that you've been living under a rock, but that's okay, we don't discriminate. I'll let you know now. Nas is one of the founding fathers of hip-hop, modern-day hip-hop. If there was a Mount Rushmore of rap music, Nas's face would be right there. Millions and millions of records sold, millions and millions of tour dates. Worldwide, he is a household name. But it almost seemed as though when rap and hip-hop became more commercial and digitalized, Nas either fell off or fell back. Nah, I'm here to let you know my man did neither or. What he did was he took all the money he made from rap and he started a venture capital company called Queenbridge Ventures, QBV. Now, what's a venture capital company? It's usually just a team of bajillionaires who find startups or they find new companies and they pump money into it and then for a return of investment. Now, between 2010 and 2016, QBV invested in the preliminary stages of companies like Dropbox, Lyft, SeatGeek, Genius. One of their biggest investments was in Ring, $500,000 investment into Ring, which was then sold for over $1 billion to Amazon, and QBV received tens of millions of dollars in that deal. So just like any other deal, in 2013, he saw the importance and the future potential of crypto and decided, yup, Coinbase is going to be added to our list of investments. So they invested. So we're going to assume that they invested their usual average of 100 to 500,000. That would have got him between 100,000 and 500,000 shares of Coinbase. Keep in mind that Nas made this investment in 2013. So for almost 9 years, he's been waiting on this day. Let's just touch on IPOs for a second. An IPO is an initial price offering, the initial price offering. So when a company initially goes public, the IPO is that first price. So the Coinbase IPO was on Wednesday and it was expected to debut at $350 a share. That would leave the company's valuation at $100 billion. If that was to happen, QBV's stake would be between $35 and $175 million. If Coinbase outperforms and is able to stay at the 400 to 450 mark with the same assumed investment, Nas's stake would then be between $44 and $220 million. So most traders will tell you to stay away from IPOs. Like those shares are already allocated and they are already owned by bigger companies such as QBV. Let's say 1 million shares are available on the day of the IPO. We, the people, would be buying our shares on the IPO date from these companies. Because you have to think, if you own 500,000 shares, of course you're going to want to sell them to the retailers at the highest price possible. For long-term investors, they usually wait at least 6 to 8 months so that they can have at least 2 or 3 quarters worth of data before making their initial investment. For day traders, we just look for support resistance, we follow certain lines and indicators, and we move with the daily data. As a venture capitalist, you're not really worried about the daily data. All you want to know is, do the people like the company and will the people be buying the shares on the day of the IPO? Thank you for tuning in and allowing me to share my information with you. Please understand that all the information I'm sharing is purely for entertainment and is not financial advice, for I have not acquired my Series 7 license. Make sure that you like, subscribe, comment, and I'll see you next week.